Okay, welcome back, everybody, to another episode of the Investor Financing Podcast. Our repeat guest, Carey, is here again. We're going to talk everything SBA. Carey's agreed to do a monthly show, and we're going to do it right around when the SBA 504 rates come out. So I just wanted to create a reoccurring show so you guys could come back. You could see where the rates are. You could see if there's any updates. And believe me, there is a lot of SBA updates. We're not going to cover all of them. We're going to cover an overview of some of the updates. And I think overall the updates are for the better. So please welcome Carey back to the show. Hey, Carey, how you doing?
Hey, doing great, Beau. I always appreciate the opportunity to be on one of your podcasts. So thank you.
All right. Well, let's start with the easiest thing first. What did the rates do this month for the 504s?
They are just 1/10 of a percentage point difference than for July. July was 6.53. This is for a 25-year fixed. July was 6.53 and August is 6.54. So very little change. So essentially the same.
Okay, very good. So for you that are watching this, the rates come out usually about the second week, first 10 days or so within the month. And then after that, so we'll usually put out a video mid-month, every month going forward. And we're going to give you what the rates are looking like. We're going to tell you any updates, and then we're going to talk about some deals and what's getting done and what are the appetites of the banks? Is there anything that's getting done that are easier than others? Any type of asset class that's a little bit more challenging? But let's dive into some of the updates in May and August that have been updated with the SBA. Where would you like to start there?
Well, Beau, let's, of course, some of these are still being worked out and everything, but perhaps the biggest change was to affiliation. And I sent you kind of a flow chart earlier this morning. I don't know if you received that or not, because it's still kind of confusing and hard to understand, but I can kind of explain it in very simple terms. As you know, working on SBA loans, if someone has a lot of affiliates, it's a nightmare to get all the documentation, and especially with a 504 loan, because you got our bank internal underwriters requesting information, and then the CDC, they're going to want maybe some even more in-depth information. So it's been simplified quite a bit. Just in simplest terms, it's basically on two levels. You got to take a look at the what the SBA refers to as the applicant. That would be the operating company and the real estate holding company. And if that applicant is owned 50% or more by another business, or if the applicant owns 50% or more of another business, then that's considered affiliation. We don't see that too often where the operating company or the real estate holding company owns another business. So that doesn't happen too often. Then on the next level, you look at the individual, and then it's also 50%. If an individual, of an applicant, owns another company over 50%, and here's where they really streamlined it. If that other business has the same the same business code, and they call it NAICS or NAICS, and then it's considered affiliation. But if it's not the same business code, then it's not an affiliate. So yeah.
So basically, Carey, if I'm hearing you correctly, like if you own more than 50% of another business, and the business is in the same NAICS code, then you have to provide the financials for that. If not, if it's in a different NAICS code, you don't need to provide tax returns for that business entity.
Essentially, that's correct, Beau.
So yeah, so people that are watching this, a lot of times sponsors that are very entrepreneurial, they might have 20 or 25 different entities. And the problem is that if we have to get financials for all of them, it became a huge pain. This simplifies it to a certain degree, where if they're not in the same business code, they don't need to provide those necessarily, if I'm hearing that correctly.
Correct.
Yeah. So that's a big win for borrowers with multiple entities that are not related type of businesses. If it's the same business code, they will still have to provide financials.
Okay. And both for your listeners, I sent you that flow chart that we got from NADCO, and it's a very good flow chart. So if anybody wants one of those, they can reach out to you to get a copy of that.
Thank you. Appreciate it. I know you sent it. I didn't get a chance to scroll down and look at the chart, but I will. I appreciate that. They also got rid of the SBA franchise directory, so there's no approved directory anymore, which basically means that any potential franchise is potentially eligible for SBA 7A or 504. I believe that banks will still go back to the old directories and see if they were on the approved list as well. Have you guys got into any of the franchise stuff yet? Has it changed? Are you guys still underwriting pretty much the same way?
We don't do that many franchises. I mean, I've got one in my pipeline right now, but we really don't do that many franchises at our bank for 504 loans. Of course, a 504 franchise loan would be the real estate, and most franchise loans are 7As because of the BizAc component of it.
What about, here's another game changer, partial buyouts. So before, when you were buying a business, the seller would have to be 100% out of the deal. Now you could do partial buyouts. And from my understanding, the SBA guidelines still require a 6-month look back. Because at first I'm like, this is awesome. You could basically, let's just say I'm buying a business. I'm buying a business and the seller wants to stay on, and I wanted to buy 81%, and then the seller would stay on as 19%. I thought initially that could happen and he didn't need to sign the new SBA loan docs or be a guarantor. But that is not true. That borrower, it's a 6-month look back, he would still have to be a guarantor on the transaction. Is that how you assess it as well?
That's the way I understand it too. If the seller be a guarantor as well. I'm not too much up to speed on that portion because we don't see that often. But I think the first time we get a transaction like that, of course, I'll have to dive deep into it to understand it and everything.
I just took a NAGO class. That's where I dove in, and we had a senior underwriter from Live Oak Bank, and I was asking a bunch of questions because it's mostly bankers, like staff in those calls, and they're not originators like how we are. So like I was asking a bunch of like structuring questions and so forth. And so that was interesting because at first I'm like, this is a gold mine. We could go in and structure these no equity injection type deals, but that's not the case. Let's also talk about standby now. Standby has changed. Before, when you were buying a business, you could have the seller leave 5%. And this is more applicable on SBA 7A deals, I believe. You could have the seller leave 5% on full standby, meaning you couldn't make payments, it could accrue interest. And that had to be for the term of the loan. It's now changed where full standby only needs to be for 2 years, which is a big change for those transactions.
Okay. I think they can receive interest-only payments during that 2 years as well. I'm not sure. But that still hasn't been, there's still not enough detail available on that yet. So, but that's a huge change for 7A loans. And I think it was about 10 years ago when they made a full standby the life of the loan. And now it's back down to 2 years, or it's 2 years now.
Yeah, that is affiliation versus management. SBA is removing the role, including the principal control of one entity over another. Impacts. SBA no longer needs to review management agreements. That's another rule that's changed, which could be substantial. I was on another call and I had printed out some of that stuff. So is there any other changes that we haven't really touched on?
Another big one. Historically, there's been the SBDCs. There's only been 14 licenses, and those are the non-bank lenders that don't have to adhere to licensing and bank rules and everything. I believe within the next year, three more of these licenses can be added. Beyond a year, I don't know what's going to happen. But I used to work for a bank. I still have, a lender called PMC Commercial Trust, and they have one of these licenses, and they still have it. And they're a little bit more flexible on underwriting guidelines and stuff, not from what I recall when I worked there. But that is a plus for brokers out there, borrowers out there who want a lender with flexibility in certain loan scenarios.
Yeah, and SBA is also putting a big push for small SBA loans. Carey's not a small SBA loan guy, but for people that are buying $200,000 and $300,000 businesses, they've relaxed a lot of the guidelines for those SBA 7A small and the express loan. So anybody out there that's watching this, Carey really, his main core focus is larger, 2 million, 3 million plus SBA 504s. He also does 7As, typically $1 million or greater from my understanding.
We can do smaller ones too. We've actually got we actually have pretty good pricing on our 7A loans. We're at prime plus one, and we're primarily real estate. We could have some airball in there, but we're primarily real estate on our 7As.
Got it. And for people that don't know what airball is just blue sky, goodwill, intangible, non-collateralized business. This is really what airball stands for.
That's more of an insider, I guess, jargon for goodwill, I guess.
Hi, if you'd like to book a call with me and discuss SBA financing, whether it's a 7A or 504, or you just don't know where to start, maybe it's a startup business, you're buying an existing business, you're buying a franchise, you're building a new office building, you want to expand your existing business, we have multiple solutions. I can walk you through the 7A and the 504 and the SBA loan process. And if you have any other questions on any other types of financing, I'm happy to book a call with you. The link's below. Look forward to seeing you soon. All right. Now let's talk about deal structuring. Walk us through. Don't necessarily give us the specifics. Just give us a little treat on a cool deal that you've working on or you've recently closed that you're structuring that be interesting to kind of talk about how people are laying deals out.
With the 504, they're all pretty much structured the same. You've got the bank first lien of 50%, and then I thought of one. Doing a large cold storage warehouse in South Texas, and the purchase price is it's $10 million. Cold storage, since it's 100% of the buildings, is considered special use, so it's a 15% down payment. And working with who I've become friends with, the sponsor, he didn't have the $1.5 million to put down, so the seller is doing $1 million seller carry on this project, and got the note structured and everything, and we're about ready to submit to SBA. It's been internally approved here at our bank, but the sponsor will be able to buy this $10 million cold storage facility with $500,000 out of his pocket, along with the seller assistance of the $1 million seller carry.
Wonderful.
That's the first one that came to my head. All the other ones are pretty just the cookie cutter 504 loans.
Let's talk about special purpose and then startup and how the 504 looks at special purpose and startup, what that does to LTV or LTC.
Okay. Special purpose, I mean, if you Google SBA special purpose, you can get a list online, but normally special purpose means if that building only has one use, like a hotel, a gas station, like this cold storage facility. And then, as you mentioned, Beau, and then you have to add on 5% to the down payment for that special use property. And then, of course, on a 504, you got to add 5% if it's a startup. So if it's a startup and special use, it's a 20% injection. And of course, I'm familiar with 504s and I have 7As, but I believe for a 7A startup, you only need 10% down.
That's correct. Yes.
All right. And there's no, I don't believe there's any increase for special use as well. It's just a straight 10% down across the board for a 7A, I believe.
Yeah, that's right. And that's also sometimes why you got to evaluate. Sometimes the 7A does make more sense because you can get a higher leverage. But for fixed rate stuff and construction, usually the 504 is superior for pricing and costs and so forth.
Absolutely.
And you could do a lot larger transactions with the 504. You can do deals up to, as high as $20 million essentially with the 504. So
yes, of course. And that's a deal that high, the first lien lender like our bank would have to take on a lot more risk. Of course, when you reach the cap, the $5 million cap on the SBA portion.
Yeah. And have you done any construction deals where you've worked with like new market tax credits? Have you ever worked with any of the bonds or any of the new market tax credits in the capital stack with SBA?
Something very similar. I'm working on a loan now where it's an oil re-refining company here in Texas, and the city actually granted them the land for them to build their business or build this refinery on, and they'll build an industrial warehouse. So I found out from SBA that land grant can be counted as injection, which I never knew that. In 16 years of SBA, I never knew that could be counted as injection.
Yeah. and for people that are watching this, if you're a nonprofit, typically nonprofits aren't eligible for SBA, but if they have a for-profit division, they are eligible with the for-profit.
I just read that the other day. I never knew that was part of guideline changes. So that's great.
So there's lots of everybody that's watching, there's lots of guideline changes. Carey and I are here to answer your questions, get deals done. Carey's bank is, when they like a deal, they're probably one of the most aggressive 504 lenders out there. They love real estate deals. There are certain asset classes that they don't necessarily love, like hospitality. But they're aggressive, and they do a lot of construction financing. They love self-storage. They'll do, obviously, this refinery. They'll do cold storage. Really, SBA programs, people that are out there are I think, such an important tool for business owners to really take a look at. They can really serve the purpose for these small businesses that want to scale up. You can look at the SBA 504 green. If you are coming up to your $5 million aggregate, you can get up to $16.5 million in SBA aggregate with the 504 green. So there's really a lot of options. And when the economy gets tough and banks start not wanting to lend, if you've got an owner-user type of business, SBA loans that are guaranteed by SBA, a portion of them, this is the product that's going to really move the economy over the next year or two as we go through these tough times. Banks right now are tight. They're tightening. But on SBA, I would say SBA is booming more than I've ever seen it, pretty much.
And the same thing happened back in 2008 during that financial crisis. That SBA was still going strong during that whole time period.
Well, very good. I think we touched on everything for this episode. Like I said, Carey's going to come back every month. We're going to talk about what the rates are doing. You guys can go to investorfinancingpodcast.com/ask. You can ask any SBA questions you have. We'll answer them on this reoccurring episode that we're going to be doing. And any other departing notes from you, Carey?
One more, Beau. I'm in Dallas, and I went to what's called the NTAGLE. There was a quarterly lunch that stands for North Texas Association of Government Guaranteed Lenders. And there was a gentleman there who's kind of a guru in the business. And he got up and spoke a little bit. He hinted that there might be some forthcoming changes to the 504 refinance rules. And of course, 2 years ago, they had some sweeping changes, but there's a couple of aspects that can still be improved, and we're looking forward to those changes if they are true of what he mentioned. The biggest change that we'd like to see, just talking to my colleagues out in the field, is let's say a refinance of the 7A loan. 85% of that 7A loan has to be 504 eligible. The other 15% just has to be beneficial towards the business. I've had several 7A refi requests that didn't fit into that 85%. So if that was lowered, there'd be a lot more opportunities for 7A refinances. So once again, those are just basically rumors, but let's hope they happen.
Yeah, that would be a really good change. And that's the other. I'm working on one. It's hospitality. That's why you don't have it, but it's a 504 refinance. It's not. He doesn't have SBA debt, but he has bridge money, so it's short-term debt, so it's eligible. But he also wants to get some other costs. So I'm working with the CDC to see what's eligible, because that's the real importance on these refinances, is knowing exactly what portion of the proceeds will be eligible for a refinance. And I'm actually maybe going to try to do a 504 with companion 7A. So that's also could be an option. So what's eligible for the refinance, and then there's some working capital that's needed. That might be eligible for a 7A companion. So there's ways of structuring these deals, but also it would be great if they just loosened it up and it came down to a equity injection and loan to cost and then benefit. If there was just that simple on these refis, I think there would be a huge boom, and you're taking people that could be at prime plus 2.75 fully indexed rate, right? So that's whatever that is, 11%. And we could drive them into 6% money on a 504 refinance. And that's 5 point something on the second. So that would be substantial and a huge savings for a lot of sponsors, business owners that are hurting right now. because of the increase in rate. So this could be a huge news for us.
Absolutely, Beau.
Well, thanks everybody for watching another episode. I know you always love when Carey's here. So you'll see him every month here on out. So anyways, thanks so much, Carey. Appreciate it.
Thank you, Beau. Appreciate it.
Hey guys, Beau Eckstein here. If you enjoyed what you saw, please subscribe to this channel. We talk all things financing. I've been in the lending industry for over 20 years, and I'm happy to answer your questions and provide great content.